People have always wanted to make money without working too hard. Passive income, a path that many investors believe leads to financial freedom.
In the ever-changing stock market, Charlie Munger's smart investment advice stands out. Now, he believes in holding on to certain stocks for a long time, and this can help create steady wealth. He suggests 8 reliable dividend stocks that can bring enduring financial success, and these stocks promise stability and long-term growth, making them very appealing to investors. Following Munger's approach might lead to a lasting and prosperous financial journey for you. Now, in this video, we're going to explore the 8 dividend stocks recommended by Charlie Munger. So hang on. Achieving financial freedom through passive income can be a smart way to ensure financial stability and independence. Passive income refers to the money you earn without actively working for it regularly. It's like a stream of income that continues to flow even when you're not actively involved. One effective strategy for generating passive income is through investing in certain stocks known as dividend stocks. Now, these are stocks issued by companies that distribute a portion of their profits to their shareholders regularly. By owning these stocks, you can receive a portion of the company's profits, known as dividends, typically quarterly. In this way, you can generate a steady stream of income without needing to actively work for it. Nice. While there are various ways to generate passive income, investing in dividend stocks can be a particularly reliable method, as it allows you to benefit from the success of established companies and earn money regularly. But it's important to conduct thorough research and consult with financial experts to make informed investment decisions that align with your financial goals and your risk tolerance. Dividends are a great way for shareholders to earn money from their investments. Investors often look at something called dividend yields to see how much they might earn from owning a particular stock. Experts suggest that it's good to invest in stocks with dividend yields between 3% and 6%. That's because if the yield is too high, it could mean the company is giving away a lot of its profits, which might not be good for its future. It's important to find a balance so that if a company starts having trouble making money or managing its finances, the high dividends it's been giving out might make its stock prices drop. This is because it could become difficult for the company to keep paying out those big dividends if they're facing financial difficulties. So the stock prices might suffer as a result. Charlie Munger is a famous investor who's amazing at picking stocks, and he's still doing it at 99 years old. He's the vice chairman of Berkshire Hathaway, a big company on the stock market. He's been working alongside his business partner, Warren Buffett, for almost 50 years. This legendary investor has picked 8 stocks that he thinks people should buy and hold on to for a long, long time. The first company stock on our list is Jeff Financial Group. Jefferies Group, LLC is an American multinational independent investment bank and financial services company that helps people and other companies with their finances. They're based in New York City. They offer a bunch of services to their clients, like helping with buying and selling stocks and giving advice on how to manage money better. They also help with things like mergers and acquisitions, which means they're experts at helping companies join together or make big changes to their structure. They do a lot of things related to money, like trading stocks and giving advice to people and companies about how to handle their finances. When you invest $100 in Jefferies Financial Group, Inc., you can expect to get around $3.44 back as dividends every year. This is because their dividend yield is 3.44%. Also, about 80.05% of the money the company makes is given out to investors as dividends, which is known as the payout ratio. This shows that they're pretty generous with their profits and share a good portion of it with their investors. The fact that Jefferies Financial Group, Inc. has raised its dividends for 7 years in a row is really good news. It shows that the company is doing well financially and is likely to keep giving out regular dividends in the future. This kind of consistency is a positive sign for investors looking for stable and reliable returns. The next company stock on our list is called Viatris. It's a pharmaceutical company based in Canonsburg, Pennsylvania. Viatris came together in 2020 when two companies, Mylan and Upjohn, which is a part of Pfizer, joined forces. They're into making all kinds of medicines, both the ones with the brand name and ones that are generic. Their focus is on creating medicines for diseases that can spread between people, like infections, and also for other kinds of diseases that don't spread, like diabetes and heart problems. Viatris makes a bunch of different medications, including well-known ones like Viagra, Xanax, and Lipitor. In their first financial report, they did even better than what experts had expected, making $4.4 billion in sales. Lipitor, which helps with high cholesterol, and Norvasc, which helps with high blood pressure, were the top sellers, making $464.6 million and $227.7 million respectively. This shows that their medicines are pretty popular and in demand. Investing in this company could be a good way to earn regular dividends without taking on too much risk. Their dividend yield is 4.5%, which is higher than what most other companies in the market offer. This means you could earn a pretty good amount of extra money compared to what you might get from other investments. Plus, since they're doing well and have popular products, the risk of something going wrong might be lower compared to other companies. Number 3, POSCO Holdings. POSCO Holdings is a big company that's all about making steel. They do a lot of things, like making and selling steel products, taking care of infrastructure and related services, trading and developing natural resources, and even building stuff like industrial plants and buildings. They also work on power generation, IT services, and making and selling materials for energy and industry. With a market value of $28.1 billion and sales worth $60.6 billion, POSCO Holdings is a major player in the steel industry. They're listed on the Korea Exchange under the ticker 005490 and have an ADR on the NASDAQ too. They're known for being the most efficient steel company globally, and they've had a strong position in their home country for a long time. Since they control around 40% of the market in Korea and sell to other parts of Asia, they'll likely keep making money. Investing in profitable companies like POSCO Holdings can be less risky, especially when the company has a history of staying profitable over a long time. They've been making a profit for 10 out of the past 10 years. That's impressive. The company's payout ratio based on free cash flow is 527.020, indicating that they're quite generous with their profits. Number 4 is ARIES Capital. ARIES Capital is a company that deals with real estate and investment. They help out with finding and managing money for different kinds of real estate projects, like commercial spaces, apartments, and hotels. They also work on buying and running industrial and logistics properties, which are places where stuff gets made and moved around. They're a finance company that gives loans to businesses that are in the middle-sized range. You could call them a business development firm because they help businesses grow by providing them with the money they need. One interesting thing about them is that they offer a high dividend of 99.8%. This means that if you invest in their company, they give you back almost all of the profits they make, which could be good for investors looking to make a lot of money from their investment. Coming in at number 5, another stock investors can consider based on Charlie Munger's list is Ally Financial Inc. Ally Financial Inc. is an online financial service company. They offer a bunch of different financial products and services to people, businesses, and big companies, mostly in the United States and Canada. They do things like helping people buy cars by offering them loans or lease agreements. They also give out loans to car dealers, help companies and governments buy or lease vehicles, and even handle the selling of used vehicles. The company offers a dividend of 4.2%. This means that if you invest in their company, you'll get some extra money back from the profits they make. They've been increasing their dividends for 6 years in a row, which shows they're doing well. They pay dividends every 3 months, and their average yield is 3.18%, which is pretty good for a financial company. So, if you're looking to invest in financial companies that give good dividends, Ally Financial Inc. could be a good choice. Number 6. POSCO Wholesale Corporation is a big American company that runs special stores where you need a membership to shop. And they have these stores in 8 different countries. As of 2023, Costco is the 3rd biggest retailer in the world. They're famous for selling good quality beef, healthy food, ready-to-eat chicken, and wine. They're also ranked 11th on the Fortune 500 list of the biggest companies in the U.S. based on how much money they make. When you invest $100 in Costco Wholesale Corporation, you can expect to get around 73 cents back as dividends every year. Their payout ratio, which is the portion of their earnings that they pay out as dividends, is about 19.88%. They consistently make money, which is good news for people looking to invest in their company. It shows that they're a pretty reliable and stable company. Number 7. Another company worth considering for investors is Kroger. It's an American retail business that runs supermarkets and big stores all across the United States, either by itself or through its smaller connected companies. Kroger focuses on selling groceries both in the physical stores and on the internet. They're well known for making and selling all sorts of food and other household items. If you invest $100 in the Kroger company, you can expect to get around $2.50 back as dividends every year. Their payout ratio, which is the part of their earnings that they give out as dividends, is about 46%. They've been growing their sales and profits for 16 years in a row, which is good for anyone thinking about investing in their company. It shows that they're a pretty solid and reliable company. The last company on our list is CAG. It's a company that helps other businesses with important financial decisions. They're like experts in helping companies with things like buying or selling parts of their business. Around 32% of the money they make goes to the people who invest in their company as dividends. This is called the payout ratio. The dividend yield, which is the amount of money you get back from your investment, is 4.3%. They've been doing well for a good number of years, showing that they're a trustworthy and reliable company. There you have it. Exploring Charlie Munger's recommended dividend stocks for long-term investment can provide a solid foundation for a stable financial future. Do you agree with this strategy, or do you have other investment preferences in mind? Let us know in the comments below, and don't forget to like and subscribe for more insightful investment tips and strategies. Thanks for tuning in.